Mr. Samario, you want to introduce this item?
Sure. As you indicated, Mr. Chair and members of the committee, this is the second quarter investment report, which ends December 31st. My name is Bob Samario. I'm the finance director. And Julie Nemes, our treasury manager, will be giving the report.
Ms. Nemes?
Thank you. Good afternoon, Chair, council members. As Mr. Samario mentioned, I am Julie Nemes. I'm the treasury manager for the finance department, and today I'll be presenting the quarterly investment report for the quarter ended December 31st, 2015. I'm going to be going over 6 different sections today. The first being what are authorized investments and reporting requirements. After that, a little information on the current and future interest rate environment, our investment strategy and approach, as well as some long-term trends on interest and earnings, interest rates and earnings, some benchmarks that we can compare the city's portfolio rate to, as well as the quarter's investment performance activity. First of all, I wanted to give a little bit of background on the authorized investments and reporting requirements for the city. The city's investment program is regulated by California government codes, specifically sections 53-600 through 53-692. And these government code sections regulate activities such as the type of investments we can invest in, the maturities, investment policy requirements if you were to adopt an annual investment policy, reporting requirements, standards of care. Those are just some of the items that these code requirements mandate. And state law does not require that we adopt an annual investment policy every year. However, we do bring one to council every year, and council adopts it prior to September 30th every year. And there's a couple reasons why we do this. One, it sets a guide for setting and achieving the city's investment policy objectives. And we have 3 primary objectives. First being, we call it SLY. First is safety, then liquidity, then yield. We want to invest in a way that will provide for maximum security, will give us adequate liquidity, and give us a return on investment. We also want to diversify the portfolio, and that's one way that we really try to ensure safety in our investment program. Having a statement of investment policy also provides guidelines for portfolio management. It sets things such as standard of care, ensures that there's no conflicts of interest. It provides delegation of authority for making investment transactions. It also defines suitable and authorized investments, what types of investments the city is authorized to invest in, such as U.S. Treasuries, federal agency securities, certificates of deposit, the local agency investment fund. We refer to that as LAIF. You probably have heard us call that before. It also sets some terms, such as you cannot exceed a 5-year term without council's authority. It also sets the percentage limitations on how much you can invest in a type of security or in a specific issuer. And I do want to point out there are some areas that the city has decided to be more conservative than government code. One of those areas is, for example, a percentage limitation on the type of investment we can invest in. We're a little bit more conservative in some of those areas. In addition to some of the standards of care and objectives, it also sets some reporting requirements. Monthly, we're required to report, and we provide a summary of the portfolio as well as a listing of all the investment transactions for the month. In addition to monthly, there's a quarterly reporting requirement, which has the same information as the monthly, but provides a little bit more. It provides a comprehensive report with a narrative that'll list out any deviations from investment policy, any noteworthy items, any change in credit quality of our corporate bonds, any information on the economic conditions, what the future may look like. It also includes a statement of compliance with our investment policy, as well as a confirmation that the city will be able to meet expenditures for the next 6 months. And if they're not going to be able to meet the expenditures, why? The last item that's required in the quarterly is the fiscal agent report. What this is a description of any of the city's investments that are managed under contracted parties. And this is going to be things such as our bond funds and our police and fire service retirement fund. So now it's going to provide a little information on our interest rate environment. As you probably know, in December, the Federal Reserve increased interest rates for the first time in 7 years. And it was a 0.25% increase, but it was the first time in 7 years on December 16th. What this means is it has almost an immediate impact on interest rates for our treasuries. And we saw the impact both leading up to the rise, because there was a lot of talk that that was going to be happening in December, as well as immediately after. So interest rates were rising in December, and I'll provide a little more information on the couple charts ahead. But there were a lot of reasons that the Federal Reserve gave for the basis for this increase. One, they said that there was an improved U.S. economy. They also said there's increased domestic spending. They were seeing a decrease in unemployment, more jobs were entering the market, and they were also expecting inflation to increase in the near future. So those were just some of the reasons why they provided for doing this increase in December. So partially because of what happened with the Federal Reserve rate increase, other reasons as well, maybe potential other economic factors, the Treasury rates did experience an increase in the last quarter, for the quarter ending 12/31. The shorter-term Treasuries showed the largest increases. Those were from the 6-month to 5-year term. The 2-year Treasury had the biggest increase. It was an increase of 42 basis points, so it's a pretty big increase in one quarter. The rates range between 0.65 and 1.76 from the 1-year to 5-year terms, which is generally the range that the city will invest in. The Federal Reserve has proposed that a planned incrementally increase interest rates over the next 2 years, but it's all going to depend on economic factors and if the economy will support those increases. And I'm going to, on the next slide, get into what we've seen since December in the economic factors and the economic environment. I did also want to point out that we've talked about this before at other quarterly investment reports, but it will take several years until you'll see a material impact for the city on interest earnings, because as maturities are called, or as investments are matured or called, that's when we can invest back into the market. So it takes time. So even though there's an immediate impact to interest rates, it takes time before interest earnings actually see that benefit. So I wanted to give a little information about what has happened in the economy since the Federal Reserve raised those interest rates. What we're seeing is that gas prices continue to fall, and the projection is that they're going to continue to fall as more oil producers enter the market. We're also seeing inflation remaining very low, also impacted by falling oil prices. We're seeing some gains in the labor market, jobs being added back to the market. However, there's minimal wage growth. There's some data that points to wage growth occurring in 2016, but at this point there has been some very minimal wage growth. And the global economy continues to weaken, specifically China, which is one of the strongest economies in the world. And we're seeing a very strong U.S. dollar that affects not only inflation, it affects manufacturing, and it affects exports. All of these things affect consumer confidence, which can affect spending. And I wanted to also point out that we're seeing the stock markets both globally and locally fall. And as stocks fall, investors tend to flee from the stock market and go towards treasuries, which also lower interest rates. So I wanted to give a little bit more information on our investment strategy and approach. As I mentioned before, the main objective of the city is to preserve principal. After that, it's liquidity and yield. We buy into the market. We don't chase yields. We don't try to predict what the market's going to do. Our overall strategy is passive. We wait for the investments to mature, and we attempt to maintain a steady maturity over a 5-year period. We call it our 5-year ladder, and there's several reasons why we do this. We want to ensure that we have adequate cash for our daily needs. We also want to make sure that at no time are we going to have an influx of cash that we have to invest in a low interest rate environment. And also recently the city has had some pretty high cash needs for things such as the desal project and the recycled water plant. And this ladder allows us to increase our liquidity for times of high cash flow needs. So this is one of the first charts I'll be providing to you. It looks at both trends and our rates over that 4-year period. It provides 5 different rates, but I'm going to focus on 3. The first being the city portfolio, which is in blue. The 5-year note is in green, and the 2-year note is in red. I'm going to highlight the last 2 years for December 14th and December 15th of the city portfolio. What I wanted to point out here is you see some volatility in both the 5-year and the 2-year note. It drops in 12 and is starting to pick up again or even out in the last couple of years. But what you'll see with the city's portfolio rate is that it's a bit more stable than the 2-year and the 5-year notes. And part of that is because we we buy into the market as things mature, and we invest in a broad range of investments and securities. So we're not as impacted by these fluctuations in the interest rates. And what this does show overall is that interest rates are picking up a little bit, but they're still pretty low. And I'll be providing a chart in the next couple slides that shows what interest rates look like today because they have fallen again. This is a common comparison that we provide. It's a benchmark. It's the city's portfolio rate compared to the 5-year note. What you'll notice here is that these generally trend very close together, and they should, because we do invest in treasuries generally 2 to 5 years. The one thing I wanted to point out is that the portfolio rate will lag behind the 5-year note as we buy back into the market. So you'll see that 5-year note has just recently bumped up a little bit higher than the portfolio rate. But in general, the trends are the same. And this is an indicator of the city's performance. If the city were to deviate substantially from that trend, it would warrant additional review. This is another benchmark similar to what we just provided. It is the city's portfolio rate compared to the 2-year treasury and the LAIF rate. Once again, you'll notice they follow very similar patterns. The portfolio rate is still just slightly above the 2-year rate. You'll notice the 2-year recently has jumped back up, but as of yesterday, it has fallen again. But once again, it's important to note that they are following the same trend. I alluded to this earlier that I would provide some data more recent regarding the treasury yields. This is as of yesterday, and this is what we call our treasury yield curve. It provides the interest rates for all the way from LAIF up to 5 years. So as of yesterday, you'll notice that every single maturity from 6 months to 5 years has fallen since 12/31. And to give you some reference, so you don't have to flip back and forth, the 2-year at 12/31 was 1.06, and it is now at 0.86. And the 5-year at 12/31 was 1.76. It's now at 1.44. So we are seeing rates fall pretty substantially again just in a month. So the quarter performance, we are seeing that we saw that the yield slightly went up from 1.11% at 9/30 to 1.30%. The interest earned did fall from about $53,000 to $390,000, with the general fund portion being about $116,000. Total cash and investments has decreased about $6 million from $153 million to about $147 million. And this is largely due to some one-time costs I mentioned earlier, some large projects going on, as well as timing related. We do receive property taxes at different times of the year, and we just in January received over $12 million in property taxes. This is a summary of the investment activity for the quarter. What this shows is about a little over $12 million matured in securities. This includes a $142,000 semi-annual payment on the airport promissory note. About $14 million of securities were called, and $20 million were purchased. This nets $6 million that went back to our bank account, a little over $6 million. This next chart is a summary of the investment portfolio cash and investments at 12/31. And what I wanted to point out here is, as I mentioned, the portfolio has decreased $6 million since 9/30. However, what we refer to as our liquid balance, which is the checking account, and the LAIF balance, has remained steady. We have seen some decreases in our securities, and part of that is due to some larger purchases in the last quarter related to desal and recycled water. We have put the $6 million that came in calls and maturities. We have already reinvested that back in January, and we are looking to invest more of our portfolio back into securities from cash now that we've received property taxes. So this is a new chart. We haven't provided this before, but I thought it was really helpful. It provides the same information on the previous slide, but it's in a pie chart format. What it is, it's the composition of the portfolio at 12/31, and it gives you an idea of what we're currently invested in. About 45% of our investments are in agency securities. About 36% is what we call liquid. It's in LAIF and our checking account. But the other point I wanted to make was to show how diversified we are. We are invested in a lot of different types of securities, but also within those categories, we have a lot of diversification within our investments. And lastly, we are recommending that Finance Committee recommend that Council accept and approve the second quarter investment report and fiscal agent report. And I'd be happy to take any questions.
Thank you very much for the report. Are there any questions for Ms. Nemus or Mr. Samaro? Councilmember White?
Thank you. Again, could you refresh my memory on the airport loan? Where it is, what it is, and how we're handling it? Thank you.
Councilmember White, yes, we issued an airport promissory note, if I recall, 2007. Is that right? Believe it was back in 2007. It was council approved because it did exceed the 5-year term, and it was for the building the new terminal. And we have the current rate, I believe, we reduced down to, is it 3%? I believe it's down to 3%. I can get you more details just to be sure. But we have, I believe it's around 3%. So we have a loan it's the airport promissory note, an investment, and we hold it right now, and it's got about $5 million right now is the balance.
And its maturity?
I can't remember the final maturity date. I believe it has somewhere between 10 and 20 years left.
Okay. Would you mind emailing that to me? Thank you.
Absolutely.
Thank you. Thank you, Mr. Chair.
Any other questions? Is there Councilmember Dominguez?
On page 16, the yellow section of the pie chart is agencies, and then the darker yellow is treasuries. What does the agencies component consist of?
Councilmember, the agency securities are slightly different from the treasuries. Treasuries are direct government issues, whereas the agency securities are backed by the government. They're things such as the Federal Home Loan Bank, Fannie Mae, Freddie Mac, those types of issues.
Any other questions? Is there a motion to accept the report and recommend its approval by council?
I move the staff recommendation.
Second.
Second.
All those in favor say aye.
Aye.
Nay or abstain. Motion carries. Thank you for your time. We'll see you at the council.
Okay.